All right, good morning, guys. You guys saw the title. Today we're going to be looking at HUIZ Holdings, ticker HUIZ. Just shocked the market with its Q2 earnings. The company reported profitability and exploded more than 50% in the pre-market as I'm recording this, as it jumped from 280 to 430. In this video, I'm going to break down the earnings. I'm going to go over the company and if I think it's a good investment or not, as well as the price projections I have for it. So a quick refresher, if you're new to this or if you're just finding out, it's a digital insurance platform in China. It has more than 140 insurers and 11 million clients. So it's a small company, especially compared to the U.S. companies, but it's gaining a lot of traction inside of the space. And some of the earnings highlights that I have written down here are that the revenue came in at 396 million, up 40% year over year, and first year premiums jumped 73%. And all the premiums rose at about 40 to 70%. And another big headline is that they reported a net profit of 11 million compared to the loss which they had last year. So it's showing that on top of that they're cutting expenses, the income ratios growing as well, and they're scaling efficiently. Some of the risks I could see with this is that the the renewal premiums dipped about 2.5%, which means some existing customers may not be coming back. But other than that, it's not the worst play right now. The only problem is it's obviously a Chinese company, so if you're trading in the U.S. or even Europe, you're gonna have issues there because you never know with Chinese regulation. But me looking at the stock price, it didn't jump like small. It wasn't like a small jump. It even hit, let's see here, it jumped up to 750, and that's more than it's already holding up more than 50% in one session, and I think it's setting up to be a big player in the space in the next 2 to 5 years. And for me, I think today we're gonna see a base case where it just consolidates in the 380 to the 450 range. But if there is a pullback, I see a lot of support at the $320 mark. So keep an eye on that. At the 320, there's a lot of support build up. And then if there's momentum today and it carries through, you could even see it push towards 550 to $6 a share. And in my opinion, this earnings was really well done. It gives Hughes some real credibility, and they're proving that they can grow the revenue really fast and finally turn a profit. But after a 50% day, the easy money might be already made, especially for traders. So for me, I'd watch how it trades over the next week. And if it holds above 4, that's a good sign. And if it slips under the 350, I'd get a little bit worried. And so, what do you guys think? Is Hughes earnings driven based on the news and all the good revenue, or do you think it's just an overreaction on the market side, and that this news isn't as good as we're possibly thinking? And also, if you're new here, one thing I like to do is go over different stocks. So comment down a stock if you want me to go over it, and I'll make sure I'll drop a video for it. But yeah, this is my overview on the company. Today was like I literally woke up and just found out about it, and I think it's for Chinese companies. It's really undervalued. It's at a five times PE ratio, and I think there's a lot of growth here. And I think even in the next 3 years, I could see this being a 10 times multi-bagger. So if you're looking for that, make sure you do your own research. This is not financial advice, but have a great day.